Hey, what is going on, Bulls and Bears YouTube family? It is Tuesday, January 25th, 2022. Another wild, wild day on Wall Street, another day of massive manipulation. But we've got some other news that we want to look at as well. We're going to talk about the markets to begin with, but there's some other very important things that I think we need to focus on here. Let's get started right here. Now, first of all, yesterday we talked about this. It was a huge turnaround for the market, over 1,000-point swing in the Dow Jones, and it made it one of the biggest market comebacks of all time. So the bigger the bubble, the bigger the manipulation. So then you're going to see more stories like this. The biggest market comeback of all time. Well, guess what happened today? Another pretty big comeback. Let's take a look at the Dow Jones again. Earlier today on Tuesday, the markets were down to about 35 at a low of 33,575 and reached a high of over 34,580 before settling at about 34,297. Another swing of 1,000 points before settling down at the closing level right there. Now, this doesn't mean markets are going to crash or going to continue to decline. Obviously, we only are down about 66 points today on Tuesday. But typically, before really bad market events happen, typically we see this type of volatility, and especially this intraday volatility where we've got these huge swings going up and down. Now, again, I'm not saying that this is going to be a predictor of a crash. I don't make predictions. But I do know that in the past, we do see this type of thing happen around the time or prior to market collapses. Now, speaking of making predictions, I want to get something out of the way. There's been not too many people, just one or two people down in comments blaming me or putting it out there that I said there was going to be a market crash. I never said there was going to be a market crash. Here's what happens a lot of times. Most of you are pretty smart, but sometimes people accuse me of making predictions that didn't come true, stuff like that. Well, here's an example of what some people do. A video a couple days ago, the headline says, the thumbnail says, real estate crash warning. That doesn't mean that I'm the one giving the warning. If you watch the video, that was Jeremy Grantham, legendary investor Jeremy Grantham, putting out that warning, not me. All right. So my videos, I'll talk about what other investors, what other economists, what other financial bigwigs are talking about. It's not all my opinion. So anyone telling you or anyone thinking that I predicted some sort of market crash, you're definitely wrong. I have predicted prices to continue to rise until the plug gets pulled on the money creation machine. Until then, the markets are going to continue to rise because that's the goal. The goal is endless market propping. All right, so if you see anyone down in comments saying that I said that, please tell them the real truth. I've never said there's going to be a market crash. What I have said here for years is that you cannot predict a manipulated market. That's what I've said many times. And I said the bubbles are going to continue to get bigger. Rising prices are going to continue to rise. And why is that? Because the problems that caused this mess to begin with are not being resolved. They're just being taped over, or in this case, printed over, digital printing of endless amounts of fiat currency. So yeah, we're going to continue to see more articles like this. And this picture is pretty interesting. Is this the trader? Is this the plunge protection team trader? He's even got his hand up. He says, hold up. We're going to fix this. Let me type in a few zeros here. Let's pump up these markets. Let's go ahead and inject some liquidity right now. Hold up, is what he says. That's what it looks like from the picture. Recent article here. Jerome Powell says economy no longer needs aggressive stimulus. Well, if that was true, why can't we raise interest rates just a tiny bit? Now, we've got a Fed meeting coming up, so the moment of truth is at hand. Is the Fed going to walk the walk, or are they just talking the talk? Will they raise rates tomorrow? If they do, it's going to be just a fraction. All right, I find it unlikely. Please let me know down in the comments. Will we see a rate hike? Or will that be inked in, even if they don't raise the rates at the next meeting? Will it be inked in as a definite increase? All right, now notice the wording here. The economy no longer needs aggressive stimulus. They didn't just say stimulus. They put this opinionated word in here, aggressive. So even if they continue to do stimulus, then we'll look at it and we'll be like, hey, what's going on, Fed? You injected 100 billion into the markets today, you bought 100 billion worth of securities. Why are you still doing this? Well, then they can turn around and say, yes, we're still buying securities, but it's not aggressive. So 100 billion, that's not aggressive. That's just that's a weak purchase, right? So they put these words in here so they can just kind of do a play on words, and that way, if you say they're doing or not doing what they said they were going to do, they could just say, no, this is not aggressive. We see what's happening here. I think most of you know the game. Kind of like transitory inflation. There's no timeline for transitory, right? It just means not permanent. So again, that kind of takes the blame off of these people. In my opinion, that's why they put these words in here. All right, so you tell me what that is. What's aggressive stimulus? Is it $1 trillion? Buying securities of $1 trillion, $2 trillion? What is aggressive stimulus? Another recent article regarding the markets: be very, very careful. Strategists urge caution on buying the dip in the market. Well, I don't think anyone really knows. Do they know what's going to happen? Do they know the type of market support that's going to come in? Do these people know for sure that the plunge team is not going to come in? Well, look what happened today. Another near 1,000-point swing in the Dow Jones. Who's to say they're not going to click a few buttons and take this market again to all-time highs? Another warning: double down on defense because stocks plunge another 10%. That's Morgan Stanley's Mike Wilson. So we're seeing a lot of these people come out with warnings, but you notice they're only warning after we're seeing this huge volatility in big red days. All right, so no offense to Mr. Wilson if you're watching, but I don't think you really know. I think you're just putting that out there. He's probably not watching, by the way. Mike Wilson, he is the chief U.S. equity strategist. Yeah, so he's probably out on his yacht somewhere. I doubt he's sitting watching bull boom bear bust. Let's take a look at this next article here. Treasury yields not dropping by a lot. We did see a pullback from the high, which was about 1.86 back on the 18th. So we're going to continue to see upward pressure on mortgage rates. And let's take a look at some quick housing news here. The Case-Shiller Home Price Index shows the third consecutive month of home price deceleration. Deceleration. Let's talk about that word. It doesn't mean prices are falling. It just means prices are going up less than they were in the previous month. And technically it's year over year numbers. So the third consecutive month is a deceleration of the year over year price in the 20 city composite index known as the Case-Shiller Home Price Index. So we're still at about over 18% a year. And this chart gives us a line, one for the national index and one for the 20 city composite index. So once again, we're right. Home prices are not coming down. There's some channels out there that said January was the beginning of the bust. Home prices are not dropping. They're decelerating, but they're not dropping. So again, we're right. Are we always right? Well, maybe. Anyone telling you there's going to be a market crash or telling you that I said that, please let them know the truth. That until the leg gets pulled out from the money machine, things are not going to come down. Until some of the problems get fixed, prices are not going to come down. The cost of living is going to keep going up, and that's going to cause further pressure on employers to have to pay higher wages. There's going to need to be some sort of plug pull or blackout in order to stop the printing machine, as far as I can see. Please let me know down in the comments. Until next time, please make sure you subscribe. Please make sure you like these videos if you like what we talk about. It seems like we're one of the few channels that's right. It seems like most of the time, I'm not bragging. I'm just saying we know how the money machine works. Most of you know, and we're going to be on top of this, and we're going to be ready when the plug finally does get pulled, because there's going to be some amazing opportunities ahead. But we're also going to continue to profit with the rising prices and look for trades. I'm currently buying the dip in a few assets, which we'll talk about in our next video. Until then, peace, big love to everybody. Bye for now. Peace.